Here's a look at the market for Friday, January the 8th, 2010. Well, our up auction has continued as we've been mentioning all week, and even before that. Of course, we're looking here at our profiles. This is today's profile. Here's yesterday's profile, and the one in the middle between them. This is what occurred overnight, so we divide them up that way. We were mentioning on Thursday, just yesterday, that we were looking between around 33 and 34 as support, somewhere in this area, 33 and 34, and you can see that the market did dip down in the regular trading hours, and actually in the overnight got down to 31 and then hit 32 on the regular trading hours, but obviously turned around and was mostly controlled by buyers all day, and then closing with a nice spike up to make new highs for the session and for the week. So this up auction continues, and no reason to think that it's over, at least at this stage of the game. And so next week we will be looking at probably in around the 38 area as the first area as likely support, and then down around 34. So those are some areas that we're looking at going into next week for support, with still a preference to be trading on the long side. Here's the market profiles that we also use. These market profiles are only of the regular trading hours only, the RTH, which is from 9:30 a.m. until 4:15 p.m. Eastern Time. Here's our software here, and you can see when the market came down, it created one of our balance areas early in the day, which is right in that area between 33 and 34 that we were anticipating as support. And so you see it did not trade much below at just 1 point, and then turn right around very quickly. Of course, these are 1-minute bars. And then start moving higher. So it was certainly confirming our up auction sentiments. We did have a long trade right in here, and it was kind of a combination of a trade. Some traders would have just broken even on the trade. Other traders would have reached the first two objectives, depending, because it was just a difference of 1 tick when it did rally and hit 37.50 here for a plus 1.5 points. So some players ended up with break even, and some ended up with profit on the first two positions or the first two targets of the position. And you can see the rest of the day more or less sideways. We did have a very late trade going into the day, just late in the day. Ended up with only a couple of ticks on that. Unfortunately, we didn't have any kind of trigger to get us along a little bit earlier. We had some opportunities here. You can see that we had some really good deceleration. We had a double squat right there, deceleration, and then the market bounced from there. And as you can see, it never did test that low again. We had another one here, did not test that low again, and another one here did not test that low again. And each one of them, they had pretty good bounces to them, with the last one, being the strongest. So everything is just working pretty nicely here with the consistency in looking at our analysis of the market, which obviously includes an intraday or day-to-day swing type analysis of the condition of the market, which, as we've been saying, is in the up mode. And then, of course, our software, which really focuses just within the day to see if we're getting confirmation of that. And that's really how we're taking a look at the market, combining those two, so that our traders have much more to work with, a much stronger foundation from which to understand the market than just a setup and a trigger. And so that's why a lot of our traders do much better than what the basic results are that we post, because they can pull this various information together and do very well with it. So that'll be it for the first week of the year. It turned out to be a nice week for us. I think so far we're at 8 out of 11 winning and break even, and we're actually at plus 69 ticks for the first week, which is plus $862. So that's what we've done so far this week. So it's nice. We really try and set up the stage so that anyone who starts to work with us really looks at a 60-day horizon, so that they can give themselves 3 to 4 weeks to really digest the information. If they've never even looked at the market before, obviously would not take that long if they're more experienced, but where they've got, let's say, 3 weeks or so to really digest what we're doing here, and then perhaps 2 weeks. This would be maybe 2 to 3 weeks. In some cases even less than that, and then a couple of weeks here of just some sim trading. So when you get some sim trading like that, it really gives you a good chance to do all of this in real time, and then that will give approximately 3 to 4 weeks where you can actually start trading this stuff and doing it with in real time. So we really think that this is basically a 60-day plan, and that we really feel that within 60 days, a trader using our methodology, analysis of the market, and our tools will be able to understand the market and be able to make these trades just as we're making them, and really within that 60-day horizon, basically paid off the investment that you made in your education. And then, of course, after that first 60 days, you're above the fold and doing well and improving, not just financially, but in your overall market feel and your analysis of the market and your trade identification, trade management, and everything. So that's what we really look at here is to get people really right back up to snuff within 60 days and really doing well. So I just wanted to finish off the week letting you know how we did this week. And of course, you have any questions or comments, please get a hold of us. You can reach us at info@eMniDayTrader.com, and of course our telephone number is on the website as well. So have a very good weekend. Thanks for taking the time to view the video, and we will see you on Monday.